Let's start the fourth learning session. Hope you can able to see my screen.
Yep.
So today we are going to learn about chart patterns. So far we have learned the individual candles and moving average plus Fibonacci series or Fibonacci retracement, not series. And this one is the chart pattern, means how to look at the combination of candles. So many candles make the chart. So chart pattern, and in the chart patterns there are two types, basically the chart bearish reversal chart patterns, bullish reversal chart patterns, and the continuation patterns. So okay. um so a quick introduction, like, what are chart patterns? So basically, the price of the stock, as we know, are never a constant. They keep on changing, right? And the change will happen either in upward direction, downward direction, or a sideways. At the same time, that the how the chart patterns or the price movement happens. So basically, uh, I mean, as we know that there is not any machine or somebody individually, they are changing the price. How the price change happen? Basically, this happens because the people like you and me. I mean, when I say you and me, that they are people with big pockets, also big banks are there who are into the stock market. So basically, in general, it is called that, okay, this is the market ups and down happens because of the sentiments, and that sentiment could be by the some individual who has the really big pocket, or maybe a set of individuals whose sentiments are working in a same direction. Okay. So when I say same direction, means any up movement, means there are a lot of people or a lot of forces who wants the price to move up. Is that my sharing gone by any chance?
No, it's there.
Okay, sir. Uh, right. And similarly, the downtrend market also happens. And sometime maybe both the sentiments are kind of in a balanced way. That means there's not much of movement is happening. Right. So so based on the sentiments or the expectation of the investor or traders, those those trends keep on changing, and and hence any trend cannot stay whatever it is for forever. For example, any chart pattern or any trend which is upside or downside, it will not remain the same. Okay, after a certain period, and that certain period may be sometime little bit longer, or sometime maybe a shorter, or sometime it I so we cannot say, but the only thing we can say that in general change is only constant. Okay, that is what it says, right? And and whatever has happened, I mean, check. Okay, so before something is going to change, maybe for example, any uptrend is going to change into the downtrend, or downtrend is going to uptrend. Before it happens, the technical charts reflects the changing behavior in their uh, I can say that charts. Okay, and by looking at the chart, we should able to know, I mean, largely we can able to predict or estimate or speculate that, okay, yes, what is going to happen, right? So those chart patterns are mainly categorized into these two parts, that is the reversal patterns, that means the trend reversal. When I say trend reversal, means either the uptrend is turning to the downtrend, or downtrend to the uptrend, and the continuation. So continuation means whatever is the main trend, it is going to continue, okay, after some kind of a taking some intermediate rest. So there are only two possibilities: either it will reverse or it will continue, right? So there's a quick introduction, and some more about reversal patterns, that, okay, when these patterns when appears some or it is got uh, I mean, it shows some sign. So based on those, I mean, as an investor or an individual trader, our job is to identify those patterns before it actually happens, or even when it is happening, reversal, so that we should able to know uh, there should be a kind of a process or the indication that okay, it is the kind of reversal or it is going to continue. That is the only I can say the main objective of learning about the chart patterns, right? So what will be the use? So chart pattern help us to identify the potential reversal or continuation, and they will also help you to identify the price targets and the potential reward. When we say, because why we are investing or trading, to have the profit. So it is the first thing, it will tell you that okay, when to make an entry. At the same time, it will also tell you to when to make exits, because both are important. And sometimes even the exits become more important. I mean, I cannot say more important really, but I can say that okay, taking an entry and exit are equally important. So it's like when we are running maybe a metro train, or when we should know that okay, where to board and where to uh, deboard from the trains. So similarly, in the stock market, we should know where to take entry and where to exit. So it is going to give you both the um, indications or the levels that okay, when to make entry and when it is the right time to take an exit with profits. Right. Okay. So types of chart patterns, as we discussed initially. So there are three types. So continuation means, reversal means either a bearish reversal or bullish reversal. And the second type is continuation. So the total three types. But in the reversal, two types, and the continuation another type. So in the bearish reversal, there are two charts, head and shoulder, double top. So we are first, let us focus on only the bearish reversal chart patterns. And it will be, when we say bearish means, it will be a happy moment for the bears. So when I say bear means, as we learned during the first session, that means you are going to sell, or in the stock market it's called short sell. So you are going to short it first. That means sell the stock first and buy later. So So it will be a, whenever you see the bearish reversal chart pattern, it will be a happy moment for bears. Bears means you are ready to sell, and later you are going to buy. What are those chart patterns? So the first one is called, okay, I mean, this is how in the, just by looking in the chart, what it means that, okay, maybe uh, in the left hand side you can see it is going upward direction, and there is some indication, and that indication we are going to learn, and based on that we should able to know that okay, there might be a potential reversal, and this area is the right time to sell your stock here, or do the short selling and ready to buy in the future. So that is how it will look like, and how to identify them we are going to learn in subsequent discussions. So the first uh, concept is called head and shoulder, HNS chart pattern, and how it looks like. so in so if you look at this chart, this is the example of Tech Mahindra, and if you look at this chart, okay, so from left hand side, okay, it is moving up and up, and after a certain point of time, it has reversed and stock started falling. Okay, so how to identify that means is, so head and shoulder pattern indicates the change in uptrend, and what is happening here is that if you look at the overall chart, okay, so why it is called head and shoulder? Because it has the middle portion, it has the one top, and which will be the, it could be all time high also, and it is a, what I can say, it is the most effective when it is this kind of formation is happening at the top of the trends. That means never in the past the similar things happen. Okay, so it will be a middle one will be the kind of a top. Okay, that is called as a head, and the left hand side, if you see, there is a like it's a you can imagine the any person, right? In the body we have a head, and we have a left and right shoulder. So
I
by
think
looking,
I
yeah,
think if we smooth out that curve with say some moving average or convolution or anything, then you
mm,
can see it probably that pattern even easier, right? I mean, currently it is all discrete data.
yes, correct. So I mean, we'll going to learn. There are the, I mean, direct indicators are also there. We can plot it, but as
Okay.
of now, we can learn individual. As I earlier also said that whenever we are going to apply, we are going to use multiple, I can say, indicator in one while doing the analysis. When multiple concepts we are going to join together. As of now, we are learning the individual one. So sometime we may see the chart, sometime it will be a combination of head and shoulder plus few more things, as I said, like moving average, etc. So that we will learn
Yeah,
together.
no, no. I'm saying that even to observe the head and shoulder pattern,
Mhm.
if you basically smooth out the curve, then you can see the pattern more clearly, right?
A curve means you meant to say these
Yeah, so if you
into
apply, say, a moving point, simple moving average or something like that on this curve, say with say five 5 day moving curve or 7 day moving curve, you will see that probably very prominently, right? Currently, it's like all spiky.
correct, possible, yeah. So why we are not adding anything that so that we can try to learn individually. I mean, just focus on only one thing. We will learn. Maybe I will show you some more clear examples. And I mean, these formation will not happen every day. I mean, it takes I mean time depending on the stock. I mean, one stock you will see that pattern maybe once in year or couple of years. Okay. So but the main thing is that okay, there will be a this kind of formation where you say that the one head in between and the left shoulder, right shoulder, and there will be a neckline. Whenever we say neckline means the bottom of the left shoulder and the bottom of the right shoulder. If we combine them, that is called as a neckline. Okay, and again, whatever I mean, these are the kind of a lagging indicator. Okay, while it is formation is happening, we may not able to tell that okay, this is head and shoulder unless and until it is formed. So ideally, we need to wait till this position. Okay, that means this is a confirm that a head and shoulder is happening, and then we can, at this price, I mean, when the neckline is breaking finally, then it will be a potential selling signal. Okay, um, so I think here I mean, one obvious question will be, I mean, how to and if there is any way that where we can get the indication here that okay somebody able to add there will be a option there should be option to identify at the peak, right? So that one that can give you the maximum benefit, right? So that possibility is also there that we are going to learn in the another level, but in the level one, it is one of the safest trading techniques that we are learning as of now. So as of now, we need to wait till the time its head and shoulder complete formation is happening, and when next neckline breaks, and then this point of time it will be a selling signal, and we can take an entry here, and then based on some other concepts that we are going to learn in the next couple of minutes, we can decide to take an entry. Okay, maybe another one more clear example I can share is this is the example of Ashok Lelin, and here it is maybe more clear. So as of now, this particular position situation, it is somewhere in 2019 where it has made an all-time high. Okay, at that point, and this is a clear again head and shoulder, left shoulder and right shoulder and the head. So what head and shoulder patterns suggest that okay, once this kind of formation is happening, and once you connect the neckline, that means the bottom of the left shoulder and the bottom of the right shoulder, that will give you the neckline. And the the distance from the top, that means the top of the trend, that is the head to the neckline, that depth is, maybe if you say that maybe a D, D is the indication of the depth, but that means this much fall is happening. And once the neckline has been broken, so here you can say that this neckline is working as a resistance. So if this resistance, or maybe not resistance, support, once this support is broken, so it can give you the target of equal to the D, and that D is already known by connecting the top of the, the head till the neckline. Okay. So in general, whenever you found such kind of formation and the neckline support is breaking, so the under equal to the this depth, that will be target. That means if somebody is entering here, once you can take the same distance again and mark the under support line at the bottom, and whenever this you hit the targets, okay, you can easily take a decision to exit from the market, right? So this is the head and shoulder pattern. Is there any question on this one?
So, I mean, just an observation.
Yeah.
So, are you saying that head and shoulder happens only with all-time high?
If the all-time high is the most powerful condition, it can
Okay.
happen in between also, but in
Okay.
between head and shoulder may or may not be that much powerful. When I say powerful, means the best favorable. I mean, when it happen at all-time high, the chances of getting your D and D, this is very, very high. I mean, when I have seen, whenever it is happening, I can say 90-95% accuracy. That
Okay.
is, it
This
gives you.
D and D is equal, is it?
Correct, correct. So this is that this head. So if I maybe let me take the example directly from the chart. Uh, just
So, okay,
yeah,
no, that's okay. I mean,
hmm,
the question is like, does it have to be exactly equal, or is it like with,
exact.
okay. But see,
So
your below line is not exactly touching the lowest point per se.
this one,
Yeah.
correct. So what I'm saying, that as per the concept, okay. So when we are learning the concept, just follow the concept. It may move further also. I say you don't care. Just get it exit. That is the okay. In general, what happens in the stock market after when people starts trading, I mean, any new person in general, I have observed that people get a, what I can say, kind of a disease. Disease means the regrets. It may go one more D further. Okay. But the main thing, when we are learning the concept, whenever okay, you should exit only at the two level, in two conditions. Either it should hit your stop loss, or it will hit your targets. How to apply that stop loss, we will also learn during the implementation session. But whenever you hit the target, you simply exit. So you have exit, it may move further also. See, it has moved further, but it doesn't sustain, it again came back. So I mean, if move further, maybe you may be feeling regret. I mean, not you, me. I mean, say that okay, whoever has traded maybe this one, so they might think that okay, I could have waited. I might have got few more profit. But don't think like that. But when we learn the concept, just apply the concept and just make an entry and exits. Hope I was able to answer your doubt, Shibu. Yeah, the main thing is that it has hit the target. That's it.
Also,
Huh.
why sell at the shoulder? I mean,
Huh.
ideally, if I sell at the head, then I'll make the most money. No?
Correct. But how you will know that it is head and shoulder unless until the formation is not happening?
So I'll let go of some profit basically if I sell at shoulder, right?
Correct. So what happens that, okay, that is the another uh, mm, whatever you are asking, that we will learn at level 4. There is
Okay.
a advanced concepts, okay, that we are going to learn. But before that, we need to learn couple of things. So whatever you are saying that, okay, if you have, I mean, if you have kind of a aeroplane, why we are going by the Belgadi? Okay, so because we are new, so we need to have a safest travel. Maybe if any accident will happen with the Belgadi, maybe probably you maybe some minor injury will happen. But plane crash, sorry, I'm using as a very bad examples, but no, I mean, just for example, please take it as an example.
Yes,
But
sure.
this one is the safest one. But how? But it doesn't mean that we should not travel by the plane. We should. But before that, maybe there are certain more things that we need to understand. Okay, so head and shoulder pattern. Next one in the can say bearish reversal is called double top. So this example is the double top. And okay, double top is all, as I said, head and shoulder. This is also happening at the top of the trend. So double top means double top can happen in between, but the most effective is when it is a real top. That is what when we say is a top. So that means the topmost position, for example, the once it is happened head and shoulder, that means we got the top, right? So next time your same stock is moving after a certain point of time, okay, in the similar level, you got the resistance here. And if you see that, okay, what is happening in this one, it is going and coming back. So it is what is called as a false breakout. That means it is breaking up, but again not able to sustain and coming down. Second time again it has broken, again came down. Third time it touched and came back. So when we are putting the resistance line at the top, so just by looking this, just look at this top where it touched the 3 times. So I mean while putting it, we should be putting our resistance or support in a such a way that it should touch the maximum number of points. And that is the reason I have not put my resistance line at the top. I have put the resistance line where it is touching or crossing all these 3 points. And the next time, whenever it is going to touch the similar line, I mean similar point, and if it is both are the kind of a highest on the topmost points, there is again the higher possibility. Again, as per my observation, I have seen around 75 to 80% of scenario it works. Okay, so this situation is called double top. Double top means reversal. Reverse. There is a high possibility of reversal. So when you're touching the maybe next point, as you are, I mean, last time you were interested that okay, you wanted to sell here. So in the double top, you can again because it is happening a next time, and you should able to sell it at this price point. And in double top scenario, basically some kind of a V or V or EU type of formation you may see. Okay, so if you look at these two top, it is making some V kind of shape, right? So from the topmost point and where it is making the V shape, the bottommost, that point is called a depth, and here is equal. If you say equal to D, then when the reversal is happening, the first target will be equal to D. Okay, so if a reversal, the first target is D here, and if again it breaks down further, the next possibility is one more D. Okay, so suppose if you have maybe 10 stock or 100 stock. Okay, so maybe whenever the first days you have achieved, you may plan or you may choose to sell your 50% of stock. For remaining 50%, you can wait for some more day. If because sometime at this level, it may take couple of days up and down, and it will go up from here or it will again break down at this price point. So we can wait couple of days with 50%, and then if the clear breakdown is happened, you can easily wait up to the next day. Because if you look at this example, it breaks here, again came down and again went up, again touched here and again come back. Right. So that's the reason. I mean, in general suggestion is we at least take the profit of 50%. If for remaining 50%, you can choose to purchase further if it is moving in your direction. And again, there will be some more conviction that why you should wait or why you should not wait. Okay. So that again we will apply when more than one concept together in the implementation. So we'll learn. But here is the first target is equal to D, and if breaks down further, it will there is a high chance for probability it will go down further. And in this example of Wipro Limited, even it is happened 3 times D. So 1D here, 2nd D here, and even a 3rd D. But 1D and 2D are the most I can say common. Third time it will happen, it is a very rare, but Wipro is the exception in this case. But these two targets are this is target first target and second target is generally, I mean, most probably happens. I mean, 70, 75%, 85% of scenario, 80% of scenario. Okay. So this is the double top and right. So uh, bearish reversal formation we have learned so far. The next one will be the bullish reversal chart patterns and the continuation. So within the bullish chart pattern, how it looks like. So the trend, you'll see it will be something like a downtrend and some chart pattern here. And then again from there, the reversal will happen and market will go in upward direction. How to identify them? So the first one is called inverted head and shoulder. So as we have learned that head and shoulder, so it is basically the just opposite of that. So that means it's like you can say somebody is doing the Sirsasana, So at the bottom you have the head and left shoulder, right shoulder, as we have seen earlier, right? So in a Sirsasana position, how we look like it may be doing the similar formation, and the neckline is also same. So the the shoulder, the reverse of the shoulder, I can say, left shoulder and right shoulder. What the line, if you connect, that will be your neckline. And the similar from the head, from your inverted head to neckline, that will be your D. And if it is breaks out, so here is a breakout is happening because it is moving in an upward direction. So this neckline will work as a resistance. And if there is a clear cut breakout is happening, so at this particular price point, we can decide to take an entry. And the first target would be again your equal to the D, that is the distance between your head and the neckline. And even if after, if again it breaks out happen further, it may give you the another D. But this D is your I can say again 80, more than 80%, 80 to 85% of scenario it happens. After that, the next target again it will depend. So it may be the 50%. And this is again the which is the nickel. Nickel is the part of the commodity market. Okay. So first the target is maybe higher chance 80 to 90%. Next second the target is I can say 50-50. So whenever you find this inverted head and shoulder, you can safely trade for this equal to D target. So this is one kind of bullish reversal chart pattern. Second, sorry. So here is the I can say the typo error. So leave it. This is just an example. Please read it as inverted head and shoulder. Please, uh, don't read. This is my mistake. I'll correct it. So, yeah, maybe I'll just show you on the chart how to use them. I mean, how to apply them on the chart. Okay. Just give me a second. Let me bring some real chart for you. Where is my chart gone? Okay. So live charts. Um, Not this one. There's my. So I'll maybe show you that first one also. Let's use the example of Ashok Leyland. So there is I mean, I can say inbuilt um, indicator which we can directly use it. So for this one, we need to go to the past data just to see that. So this is, I will remove the all the marks. Okay. And where to find that head and shoulder? Chart pattern or this one. Uh, yes. So if you can see here the first, second, third, fourth, fifth, sixth. So within the sixth toolbar menu item here, if you look at here, this is called head and shoulder indicator. And how to apply them on the chart. So the first clicking you should be doing where the left shoulder is, I mean the formation point. Okay. So this is your, if you treat this one as a shoulder, so this its formation is happening maybe somewhere here, the lowest price point. Okay. So you can click it here, one click. Second click should be on top of your left shoulder. Third click again at the bottom of the shoulder line. So this is your bottom of the shoulder. And fourth click should be on top of, that means at the head, top of the trend line. 1, 2, 3, 4. And the fifth one, fifth one should be again the bottom of your first left shoulder. And again at your top of the, right shoulder, again the top of the right shoulder. And finally at the bottom of your right shoulder. So this is how your head and shoulder. So head and shoulder, it may not be always as a perfect man. That okay, it's either like it can be little bit tilted left and right. The main thing to identify that okay, there should be left shoulder, same right shoulder, and one head. And once you apply them, so what will happen? It will give you this kind of green formation. Suppose if you don't find anything left, for example, maybe your chart, your left topmost downmost point, I mean, the bottom most point of right shoulder is somewhere here. Okay. And you don't find it here. So if any area which is left out and it is not making a kind of a filled colored formation, that may not be treated as a head and shoulder. So to complete it, you need to have certain point. Okay. And by putting this particular indicator, your this the kind of there should be a proper tracing like this ascended formation should come, and then only it will be treated as a head and shoulder. Even, and this is the indicators we are using just for the confirmation purpose. Once you will start using the chart, just by looking into your by your eyes, you should be able to know that okay, there's something, I mean the formation is happening. So it's like a rendering that we some long back we used to look at. uh, Shibu, hopefully you remember the lot of rendering we used to use in our
Mhm.
GE days, right?
Hey, just
Yeah,
out of curiosity, I mean,
yeah.
can you please apply that some kind of smoothening function on that curve? I mean, maybe a 3-day or 5-day moving average.
Yeah, sure, we can do that. So let us say moving average, um, and let's say that 5 days. So 5 day moving will look like this.
Yes, you see what I was telling you right earlier. On a smoother curve,
Hmm.
you you can basically see those patterns much more prominently.
Yes. So see, normally whenever we are, I mean that in the example, when I took the picture, sometime it may not be, I mean the right picture. Okay. And sometime what I need, I maybe take when I take the picture of the complete page. Is it not is it is if not is not, no, uh, taking the proper step. I need to resize them, and while putting that, it get distorted basically. Okay, so if you have watched my video of how to use investing.com, normally whenever we are looking at the chart, we are looking in a different way. Okay, the best way to look into chart is after zooming in, zooming out, whatever you see, just click here at this button called auto. Okay, once you click that, whatever your chart, it will display you in a most, I can say, optimal way. And after that, you can further do zooming in, zoom out, just to make it maybe a much more clear view. But once you do the, I mean, auto, in this particular zooming and zoom out situation, it will give you the best view. Okay, so maybe if you call it smoother by just by looking at the chart or by applying some of the indicator, I mean, it will be up. I mean, once we learn all those concepts, it will be up to you that okay, how you wanted to look at chart by applying some of the indicators, without that, or
I
by,
mean,
yeah,
my comment, I mean, has nothing to do with particular, the domain. I mean, it's like, say, if you have a discrete chart, the patterns are generally slightly difficult to observe.
right,
So in all, pattern or data science, basically you smooth out the curve by
huh,
some function so that
right,
you observe the pattern better. So from
agree,
that point I was telling that rather than looking at the raw data or the candle chart, which is
right,
essentially a discrete data chart,
correct, correct.
isn't it better that I look at a maybe a 3-day moving average? That way these patterns are very clearly visible.
Correct, correct. Absolutely agree, Shivu. So this is great observation. So just by, with a moving average, there is a very interesting pattern that we will learn. That is called, I can say, guppy chart pattern. So
Mhm.
it is a kind of future concept, but maybe I'll quickly sh- show you that, uh, that view. There is the smoothening view. Okay.
Mhm.
Um, Hope I will be having. Uh, uh, um, just give me a second. So look at here. Okay. So I am removing the overall candlestick pattern itself. Okay.
Mhm.
These are the just moving averages from 3 to 60.
Mhm.
Okay. So there is a one trading concept just by applying the moving average or EMA. Okay. And there are so many. So there was this great guy called something Guppy. I mean, his surname was Guppy, and he discovered this kind of thing. And there are some, uh, in some script. So basically, this Guppy I have applied on a silver. Okay. So is this as per this concept, okay, wherever there is a narrow down is happening. That means the all these EMAs are coinciding together, and after that it is some crossover is happening. Based on that, you can able to, decide to take the trades. Okay. So yeah. So this was just an example. Just I wanted to show you that, okay, the moving averages people use in that way also. I mean, sometime down the line, we are going to learn something more about that. But good observation about your smoothening the chart by using the moving average. Okay, so shall we move further?
Sure, sure.
Okay, so it was head and shoulder, and there was okay, where what we were learning about the inverted head and shoulder. So let us look at some example. This is the nickel long back 2017. Um, so nickel uh, daily. No, I don't need guppy. And typically, this inverted head and shoulder happens. I mean, it is the most effective when it happens at the bottom of the trend. Okay, and on maybe in any particular stock, I mean, when you keep on following your favorite stock, and once you remember these one, you should able to identify when the formation is happening. So this is the area where such kind of formation, it is not very sometimes it is not very clear unless and until you zoom at the proper level. But when we start observing the chart closely, so I mean the very closest example which I can give you, that okay, any stock or script, it like your I can say partner, right? So unless and until you spend um, reasonably good time, then only it will be. I mean, there is a higher possibility that you should be able to understand the mood of your partner, how, when, and what he or she behaves. So similarly, the stock also. So each and every stock movement happen in a different way. And once we spend a reasonably good time with a one particular script, then it will be a, I mean, higher chances of uh, you know getting about predicting or speculating the next move. So in this one, if you see, so maybe if I can highlight, okay, those areas. So maybe this particular one, I can say the left inverted shoulder, this is the right one, and this is maybe the head. Okay, now what is happening? So, and if I need to put the chart here, sorry, the indicator here, so I need to start. Let me see, where is the, yeah, head and shoulder. So I can start. So in the normal head and shoulder, I started at the bottom of the left head because it left shoulder, because inverted one. So I'll start with the where the formation of the left shoulder is happening. So the first click should be there, and then at the left shoulder at the bottom, I mean, in the left inverted hand, bottom of the sorry, left shoulder, then at the head, and again the first right shoulder point, I mean, bottom of that, then the top of the shoulder, and then the bottom of the shoulder, maybe somewhere here. So this is the my head and shoulder, and target wise it will be the same. So if I put the resistance line at the bottom, sorry, I'll put a horizontal line. So this will be the my resistance line, sorry, support line. And if I connect the distance between uh, head and the neckline, that will be distance equal to D. And if I copy the same line, and again from the where the breakout is happening. So breakout is happening. This is the neckline. Okay. So whenever it is, and maybe just to clearly mark the neckline, maybe I'll just put one more horizontal resistance, horizontal line. So that means whenever neckline is breaking, or maybe this new the line I have put, when it is a breaking clearly, from there I can decide to take an entry, and my target will be again equal to the D. So I just copied the same line, and I'll put this target, and maybe put one more target line. Okay. Maybe I'll just change the color just to differentiate it. Okay, this is my target. And I'll take an entry here. So basically, this is the bullish reversal. That means I will buy the stock first and then sell it later. Stock, or I mean whatever the script is. So this is my ideal entry point on this particular candle. So not basically this one. I need to wait for the complete breakout. So this the second candle where the complete breakout has happened next day, and I can take an entry here. And when my target is achieved, maybe when the stock is reaching at this one, I should able to make an exit. And again, if we are having maybe a good quantity, or let's say, okay, so we can take a cautious decision to sell 50% here, and with remaining 50%, we can wait for the and the target. Okay. So the first target, it is again, as I said, high possibility. It will 80 to 90% it is going to happen. The second possibility is again less. So, but when the clearly this first target meeting again, it is going further, we can, with the 50% of the stock, we can decide to change it further till under D. Okay. But any point of time, it is maybe too much reversal. So maximum weight point is this one. Okay. So suppose if we have not exited your 100% at this price point, we can wait further. And if it again breaks down, this particular target, then definitely exit that one also, because the same profit you have already got. So for the remaining profit you are changing. So if it is again breaks down clearly at your first target, you exit with the same price. Otherwise, if it is again maybe taking the further support and moving up further, you can change your target to the under D level. Right. And these are again we are going to repeat or revise when we are doing the implementation sessions. Okay. So this is the inverted head and shoulder. Then, and the second one is called double bottom, or the W formation. And the double bottom is again the most effective one when it is actually at the bottom of the trend. So that means stock has touched the all-time low, and from there it again moved up, and one more time it is came down at the same level. So when it is coming down at the same level, and this line is the bottom most line, or that I can say the lowest price point for that particular stock. And if it is touching one more point, then one can one can decide to take an entry here at the second bottom. Okay. And the line which is connecting the first bottom and second bottom, which is nothing but your resistance line. And from the distance between the support line, and the first resistance line. So whatever, so if you look at here, it took the resistance here and came down. Okay. So the distance between these two line will be your D, that is the depth. And if we are again taking the entry here, you can safely trade up to the first D, and it is a most favorable scenario. I can say 90% of time it does happen. And once their first target achieved, you can again decide to exit your 50% of the trades, may book your profit, and with remaining 50%, you can wait for the another day. Okay. Why I say only 50% they book the profit, because whatever the profit market is giving, at least 50% book the profit. The remaining 50% chances are again 50-50. It may or may not happen. In this example, these both the targets happens. So you can safely wait. And again, if you are waiting, don't wait for further. If it again touches back here and again breaks down the your first target, uh, exit. Otherwise, if you are waiting, wait till the complete breakdown is happening. And as soon as it's breaking down, whatever the market price, just exit your position immediately. Otherwise, wait. If taking a support in this example, it it even reversed before taking the support. It came down very closer, but again move further, and it has given your second target also. Okay, so this is the example of double bottom or W formation. Is there any question?
No, no, that's
Okay,
fine.
great. Okay, so the third example of a bullish reversal uh, chart pattern is called cup and handle. And this particular chart formation is, I can say, one of the rarest scenario. However, when it happens, I mean, for any stock, I can say it happens only once in a, maybe I can say, lifetime. Okay. So this particular one example is one of my favorite, because I traded this in this stock personally in 2019. Okay. So so why it is called cup and handle is, there is a very first of all, it took very long time to uh, make this kind of formation. And if you look at this example, I have selected this chart in a weekly time frame. And if you look at the duration, it is somewhere in 2010 and till, you can say here, this is the 19, right? So after 19, so between 2010 and 19, so almost 10 years, right? 9 to 19. So it's almost 10 years. And its formation is for those 10 years, it is making a very, I can say, shallow cup. Okay, so this is, I mean, in this one, it is not even that much cup. It is, you may say that it is more of looking like a plate, or the where traditional cup and plate we drink. I mean, we carry the traditional way of drinking the tea. But again, it is called as a cup. I mean, as per this chart pattern. So, and there will be the another similar formation which will happen in a comparatively smaller period. Okay, so even it is a weekly, for example, this making of the cup will take a 10 years, but similar formation is happening in maybe a year or 1.5 year. And that next one is called handle. Okay, so here again, because somebody named it a cup and handle, so I have to follow that particular gentleman, because otherwise you may ask question. I don't see that there is no handle. I mean, there is no such type of handles in any cup, but it is the first formation is called a cup, and second is small formation is called as a handle. Okay, so what that concept says that whenever such formation is happening, so maybe for a long period of time, that means the price is not making any very good positive move. Okay, but when the positive move is happening, okay, then the depth, if you connect the line, okay, the line means, so here is this one is the resistance line, and this is again the rest, okay, the resistance line here. So it is touching same price point, and it coming down and again touching one more time. So from this point to this point, it is making a cup, and there is a small handle, and the distance between this particular I can say a resistance line and the bottommost portion of this cup. Okay, that will be the depth in this kind of chart formation. And the first target will be the, you can put the, be the similar kind of line, same, with the same distance, and you can put one line. And here the good point is, once, because it is happening, this kind of formation is happening very long time, and it generally gives the multiple targets. Okay, and especially in this example, I I took an entry, I think around when the price was around 50 rupees. I have not able to take the maximum profit, but if I remember correctly, I took entry at 50 price point and I exited somewhere between 268 only. But this particular uh, script, it moves from 50 rupees to 2000. Okay, and just in less than 6 to 8 months. So 50 rupees to 2000 means how much? Around 40 times. Um, so just give me a second. I'll just have some water and come back in a minute.
Sure, sure.
Okay. So even when, I mean, it takes a very long time, but it happens, when it happens, it gives you the multiple target. So um, some other places I have seen minimum, I can say minimum five. So whatever the D, it will, you can easily, if such formation you can see in any stock after a long time. Okay, and minimum duration, I can say you should not look for a shorter period of time. It should maybe a couple of years, 3 to 4 years, and then you can have the multiple target equal to DDD. So if you have a bigger lot, I mean, you can decide. I mean, at least 4 or 5 times you can easily wait, and after that take a call. Maybe exit 50%, 60%, whatever you like, and then for the remaining value, you can keep on changing till the time it gives the clear reversal signal. Okay, so this is the one example of bullish chart pattern. Uh, okay, so we have, I think, a couple of more chart pattern in, sorry, not couple of more, basically the continuation one, which we will continue tomorrow. We have almost finished the line. I mean, the today's time frame. So we'll continue with the, okay, let me see. So Shibu, if you have maybe another 5 to 10 minutes, we can, I think it is only one in the confirmation one,
Sure,
we
sure.
can complete it. Okay.
Let's finish that, yeah.
Okay, great. So it is flag and pole. Flag and pole is the example of bullish uh, and plus continuation. Okay. So in the, sorry, in the continuation one, it may be a only two type, right? It will either continue going further up or continuing further down. So and in one example is called flag and pole. So what is happening is, for example, any chart is supposed moving up. Okay, and in on the way it will kind of make a side move. So when it is moving a sideways, for, so either that means it is neither going up or down. Okay, so whatever is the up and down is keep on happening. If we can kind of connect maybe all the tops and all the bottoms, so it may form as a, sometime it will form as a square, sometime it may form as some kind of a triangular shape. Okay, so that particular you know uh, kind of a triangle formation, or it could be a rectangle or sometimes a square. So it is called as a flag. Okay, and the pole from pole, we can say that, okay, from where the price has clearly started moving up, and till the time it started making maybe a sideways, like up and down formation. So that particular straight line or the up move, it is the, if we maybe mark is a um, maybe a single line from the bottom of the trend until the time it is started doing the back and forth in the sideways, it will be called as a pole. So basically, the pole formation happens first and the flag later. But for the namesake, whoever has invented, they call it a flag and pole. So ideally, they should be calling as a pole and flag because pole formation always happen first. So, and how it gives the target is that, okay, once this flag formation is happening, once we connect all the tops, and whenever it is breaking your top, right? Top of the flags. In this example, if you see the highlighted area is the kind of flag. So here I have connected maybe most of the tops and most of the bottom. So it is giving me kind of a rectangular shape. And where it is clearly breaking this top of the flag line, and this is the ideal uh, point to make an entry. And okay, so your first target will be the height of your flag. So as I said, flag may not be always a rectangular flat, it could be a triangular flat also. So when we are having a maybe a triangular flat, so triangular flag, so which portion is your wide area, that portion, if you the height, if you measure, okay, with your maybe arrow symbol, that would be your first target, and the second target will be equivalent to your pole. Okay, so here I have, this is the height of my flag, and I just copy and paste the same height of the flag from the point from where it is completely breakout is happening in upward direction. So my first target will be the height of the flag, and the second target will be height of the pole. Okay, so suppose again, if we are trading with maybe a 10 stock or 100 stock, you can safely trade for the height of the flag, maybe for 50%. If you want to exit, you can exit, or maybe 40%. Again, it will be up to individual. And for the remaining 50%, you can wait till the height of the pole, and that will be your second target. Right. So that is a one example of a continuation pattern, and which is happening in a bullish way. Similarly, there's another example of continuation in the bearish market. That means in a downward or downward trending market. So if you look at, this is the ONGC example, where the stock prices started falling, maybe suppose for this price point, and after coming to this price point, it took maybe a resistance, and it started, you know, uh, it's kind of a side move. It is neither going completely up nor down. So, and if you look at here, it is not a clear cut rectangular. It is some kind of, um, rhombus kind of shape, and which is I have just connected all the tops and all the bottoms. When I say all the bottom, means most of the bottom. That is how the your support and resistance that we draw. So we have drawn the support and resistance for a smaller period of time, right? And when it breaks, so in the continuation pattern, the main thing is that whenever any stock is falling, falling down, or any stock which is in downtrend direction or uptrend direction, we need to see what is the main trend. Okay, and after that, it started going in a sideways move, so we need to wait that, okay, in which direction. So mostly it will continue main trend, and the ideal point of making and taking an entry will be when it is breakouts. That means in a upward direction or downward direction, depending on the chart that we are looking. And when is the complete clear breakdown is happening or breakout is happening, we should able to take. So this example, because it's a downtrending market, so basically the breakdown is happening. So in this, at this price point, it is a clear cut breakdown is happening. So we can safely decide to take an entry here. And the first target, as I said, again will be the equivalent to the height of the flag, target one, and the target two will be equivalent to the pole. So in this example, if you see, I have maybe uh, given one support line here. So my ideal entry point will be this line, because this is the one of the strong support line, and if it is breaks clearly, then I should have, I mean, I can decide to take an entry here. Maybe here I think it's a wrong arrow. Maybe this is the most conviction, I mean, favorable position to take an entry, and the target will be again the equal to height of the flag, and then second target will equal to height of the pole. So these are the two continuation patterns example of flag and pole in a bullish market and bearish market. Okay, and that is the end of the today's concept about various kind of charts. Is there any question?
No, I think that's all right. Hey, one quick point. I'll
Yes,
just
yes,
take one
please.
minute. So
Yeah, yeah, sure.